Welcome back, everybody, to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano, and we have before us XRT coming off Reg Show. XRT, certainly, I should say GME did some very interesting things the last time that XRT came off Reg Show. We're going to take a look at some of that in depth today, as well as try to use this to evaluate what this might tell us about some of these factors we've been looking out for over the past few days. Yeah, especially what some of our ETF action in general might be telling us about what we can expect price action wise going into the end of this week and going into the rest of May. So that's all coming up today. Before we get started on that, we will get started with our gratitude as we always do. Firstly, thanks go out to GME, Sure Why Not, Feck It Be Grand for sponsoring today's article and video, as well as to our monthly contributors, Dat Scruffto, Kenwood Berlin, and Not Medical Advice for helping offset some of my data expenses on a monthly basis. Thank you very much to everyone who has contributed thus far and will be contributing in the future. You help me continue my research here and continue my publication efforts to reach more of the GME investment community. So thank you very much. Yeah, so right, XRT definitely coming off Reg Show. What does this mean? It means, when we say this, right, it means, well, technically off Reg Show. Well, it's off, what we mean is right off the regulation SHO, which regulates short activity, right? How shorting is conducted in the markets and how things go about this, right? Right, we mean the threshold securities list. So the threshold securities list, when a security goes onto this list, it is when it has in excess of 10,000 fails to deliver for 5 consecutive trading days in a row. So it will go on this list, and then it has much more stringent settlement requirements, right? So technically, you're not supposed to, you don't get 35-day fails to deliver until it's reduced to 13 calendar days. I believe it's supposed to be 13 calendar days to settle any fails that you have on the stock. Until 4 or 5 consecutive days, there are 0 fails to deliver recorded on that particular stock. Only once that has occurred can a security be removed from the threshold securities list. So do we know for a fact that that's something that's happened on XRT? Well, we don't necessarily know that for a fact, but we do know that regulatory bodies have considered that to be the fact. So there must have been a bulk of fails on XRT cleared. Something perhaps that had to do with these pretty big fluctuations in liquidity. And that may have, in fact, right, we may have seen sort of the tail end of that process via this very large, right, our largest trade on the day was for 1.2 million shares at the ask, which was actually recorded as a dark pool after hours trade. Yes, after hours. It's a $33 million order. That's certainly quite a lot of GME. I know a lot of people out there were a bit discouraged that potentially that was not reflected in the price. Oh, we see these 1.2 millions hit the tape. In fact, if we take a look, we scroll down a bit, we can see, right, you can see this volume candle right there. It is right there at the screen. You can see this volume candle, and nothing really happens here to the price. What may have happened is that may have been that these shares were acquired basically, right? Some sort of order. This could have been some kind of VWAP order. There are different sorts of VWAP orders. Sometimes they just have that kind of diagonal line, just chug, 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 chug. Sometimes they have to, maybe they're exacerbated, right? There are different ways that VWAP orders can be entered. And so it's possible that right around midday, somebody went ahead and entered a VWAP order, and then things got kind of exciting toward the end of the day. But that this was then recorded at the closing price here, something like that, and that this may have been to acquire shares in order to get XRT off of the threshold securities list finally. Although it's supposed to be for 5 days, so there's supposed to be 0 fails for that to occur, but because it's an ETF, there can be some ambiguity with T+6 that has to do with like the authorized participant with creation and redemption. So it may have been related to that. Can't say for certain. We also got a new overnight EXTO order here. So that came in at strange price, right? 28.29. That doesn't seem to have meme numbers except 9-8. Is this potentially the beginning of a countdown sequence, right? Are we going to get like 7-6 the next time we see one of these? Like 27-26, that could work. So we'll have to see. We'll have to monitor that. But I did notice that in particular, it formed this trident sort of pattern. So we have right in the middle, we have this very large move up, this very high touching candle. And these two that are very similarly priced within, I think it's about, this was 28.24. Yeah, within about a nickel of each other. So this was 28.24 and this was 28.29. So these are within a nickel of each other. No, this is that right? 28.40. Maybe this is 28.42. In any case, they're very close to each other, and they sort of form this trident pattern, although it's flipped from this earlier sort of trident pattern we have before here. Okay, well, why is that important? Why would these potentially be related to each other? Well, this price action was generated, right? This followed right when XRT came off Reg Show the last time. So XRT was on Reg Show starting, I think it was the 26th of December. So during one of our double tops, actually in December, January, right? So the 26th or the 27th of December was part of the double top that culminated on the 7th of January. So here we have, right, XRT came off Reg Show for the last time on February 2nd. This is, February 10th, 2/10, February 10th. So we had this pretty big bullish day right here on February 10th. IV went up noticeably. We stalled for a little bit. We trade down, but then, of course, the really exciting day was then on the 13th, where after hours, we shot up from something like 25, right? So this was the 54-hour, the 54-hour moving average here. We shot up from $25 all the way to $31.66 during the after hours period and opened around 28 and change, and then traded down. Then we got a secondary kind of this last prong of the trident here the following week, and then we had our kind of second wave of shorting here into earnings, where of course we bottomed out on this trend at like 21.17 or something. So very interesting, right? Very interesting to notice the similarity. Very interesting to note that this trident pattern here is entirely formed this time by single share trades by our overnight mystery buyer who executes these single share trades. So looks very similar. Also corresponds to XRT coming off Reg Show, but the spacing, of course, is flipped here. Very interestingly, these are mirror images of each other, with kind of this cauldron formation here in the middle, with the average price basically running through these highs here of about equal. So right around 27.50, and this is also right around 27.50. The highs of these two peaks and the base here, right? This sort of point of stability. These are around 27.50. So interesting to see this mystery EXTO buyer. Maybe trying to tell us something, maybe trying to play with this a bit. But what could this suggest about XRT coming off Reg Show? Does it necessarily suggest that this is sort of our fate for a move to the downside? Or could this mean that now we're going to see several days where we move to the upside? Certainly the last time that this happened, that's what we got, right? We got this pretty dynamic move, this trident pattern. We broke our trend of sort of diving in our IV composite, IV30 composite. We traded up for a little bit. We reached a low, and then immediately after this was done, then we started to tick up, right? IV started to tick up as we were about 1 month out from earnings after this collapse, right? So after February OPEX. Very interesting. Can we see anything in our data that's going to tell us, hey, we're about to pop, or is it right? Is what's operative that necessarily this type of price action indicates that with sort of XRT coming off Reg Show, does that mean we're going to move up, or is it that we're going to resemble for about a week, as I've noticed, right, as I've been pointing out for a couple of weeks now, right, in our recent phases up and down, we have had this week right in the middle where we do something that resembles the inverse phase. So during our price up phase, in November and December, between 11.29 and 12.5, we had a week of huge liquidity and pricing down, right? So we moved down about $6 off of our high. Very, very big volume down, which was a heavy utilization of GME available lending liquidity. Lending liquidity was decently high at that time, and it was used in very substantial amounts to transpose the price down. And then we resumed this high volatility and sort of price up phase going into January. You can see the tail end of this back here, right, on this upper chart. So, but then on our price down phase, we saw this kind of Trident pattern emerge where XRT came off reg show. We moved up, and then volatility was restored. Options pricings went up, and then our price action took us all the way back up to where we had fallen off. So we briefly returned to this, and then we entered into this second sort of shorting and liquidity and price down phase within this broader sort of two-part cycle. So if we're in a volatility phase now, which increasingly for the month of May, that doesn't seem to be the case. We have strangely low IV for May, but still elevated IV for June, July, and even October. So this price phase is somewhat strange. It does not look perhaps as clean as either of the last two that we've seen. So we'll dive into our data a bit to try and see if we can get some sort of idea of what our various tools can tell us about what we might expect. So in terms of broader market context, we are still looking relatively stable in the immediate term. I can't emphasize that enough. When I say the immediate term, I mean a few days, basically into the end of the week, and that's kind of it, and maybe not even that far. Certainly heading into today, we have that characteristic from our options data. It does look like we are heading toward that 560 level as an overhead target. Number one, it is our 50-day moving average. As we haven't moved over, and we've been pretty well sustained over that 20-day moving average for a while now, it does look like that is a palpable overhead target. An easily identifiable one, I should say. And if we take a look at our options data by strike, we can also see that 560, that is our largest position in terms of net call gamma exposure for options market makers. So very oftentimes, especially in our broader market indices, the call wall serves as an overhead target, a place where options activity is likely to push the price until it is reached, and then options flows then most of the time reverse down to the other side. If we have very extended conditions, then sometimes we can kind of blow. I should say, if we have extended stable conditions, if we're in a big bull market, we can blow through these. Generally not, I wouldn't say with ease, but we can move through these pretty aggressively. Will we move through this level aggressively? I'm not sure. Right, we still don't have the fundamental broader uncertainty evacuating. We don't have this resolved regarding tariffs, regarding China, regarding certainly right coming up this week is the Bank of Japan rate announcement. We have Fed rate announcements that we're not sure about. So none of this uncertainty has disappeared. So I would rather I'm more so leaning toward this call wall overhead, if it is reached, being something that we end up deflecting to the downside off of, unless we get some kind of news that lines up with a touch of that position that then takes us over that. We do still have some earnings left this week. And as we can see, into today and even into tomorrow, right, that's a pretty high net concentration of call gamma. They're not huge expiries, but these are pretty large, and certainly larger than anything we've seen recently in terms of call gamma concentration. So this generally says, all right, when we see a high percentage of a high balance toward the call side, towards call gamma exposure, which this is trader long calls, dealer short calls, right? Because dealers are short those calls. They have negative delta and negative gamma on their books, which they hedge by buying shares. So as the price moves down, those positions increase in their net negative delta and gamma values on the dealer's books, which means the dealers will purchase shares in order to hedge those positions. Yes, I should say, as the price moves up, the delta and gamma values on the traders' books go up, so that dealers' books go up in the negative sense, and so they hedge those by buying shares. So, so this is what we have facing us in the immediate term. It does project, right? We can see here this kind of cluster into today, into tomorrow, and traders are basically walking this forward one day, right? One day kind of goes well. Things don't fall apart, and so things get walked forward one more day, and then one more day, and one more day. And we can see that we have softened a bit heading into early May. So some of these older expiries are sort of neutral, right? So the 9th, so this is going to be not this Friday, but next. Pretty neutral, still neutral into the 12th, the following week, right? These are more or less neutral, not super stable. They can become more stable if we can kind of continue this march up. But I will point out that May OPEX, although it's not nearly as bearish as April OPEX or even March OPEX were, it's still net bearish. We still have a lot of put gamma there, and as we start to move down to the downside, a lot of this will realize these gamma values will appreciate as all of these puts that are established at these positions move into the money. Right, dealers will sell shares in order to hedge their short positions. As those short positions acquire higher positive delta and gamma values on their books, they'll strive to remain neutral. That means selling shares. And so that will send us down, right? So I still expect something like that to occur. I think if Bank of Japan, kind of whatever they say, I mean, if the rate comes out and it's normal, but if it's unexpected, right? If they hike the rate, that's probably going to mean more equities outflows in order to meet interest demands for the yen carry trade. Again, this is this omnipresent worry about the yen carry trade. And then we should see a lot of this put gamma realize. Is what I would expect there. But we don't know. Even it could be like a planned sort of move to the downside, maybe not as sharply if they keep rates steady, but to kind of keep that in mind. Okay, so while we continue to have stable conditions, we have a stable trading environment for GameStop. We have seen GameStop diverge to a certain extent, notably to the upside, despite all of this uncertainty in the broader markets, this turmoil in the broader markets. But of course, when we do have a bullish environment, GameStop tends to benefit from that as well. Which we have also observed. We can have some days where things get dragged down. I think early on, well, yeah, not quite yesterday, but we have had days where, where GameStop has been dragged down along with the market, even if it's to a lesser extent, despite this sort of post-convertible bond offering environment where GameStop has been much more resistant to market volatility. So, I mean, for the immediate term, this continues to look good for GameStop. There's nothing here that says, oh, watch out, we're about to tank. We don't see anything like that right now in the broader market. But again, if we do start to see some sharper moves down, if we do see volatility tick up in the broader market, this could provide an opportunity for institutions to take advantage of, say, XRT being off SHO to then force this into some significant outflows, which could affect GameStop given its weighting in XRT. Okay, what about short-term stuff? Like, what did we see yesterday? Yesterday was very interesting, right, to see us kind of close that strong. Again, as we talked about at the beginning of the video, that likely had something to do with purchasing of the shares to get XRT off SHO. Right, this big dark pool order. It'd be interesting. It'd be interesting to see if that indeed did have something to do with getting XRT off SHO. Hard to say at this point. If you know, say in the comments what you think. Certainly happy to have some additional insight into that. Lending liquidity. So XRT did come down, right? It is getting back down again towards these very low numbers. We saw shares outstanding, I think, get up to 4.35 million after this pretty big dip. Again, you can follow up on these live. I would really recommend that you go check out Richard Newton's, not only his channel, but also the data which he collects. It's a very excellent resource in order to be able to track this information. So I would definitely recommend you avail yourself of that. We can see, right, that, XRT has come down again, which means there has been redemption, which means, no reason for GameStop liquidity to really go anywhere. We did see it dip. That's very interesting that we did see it dip overnight here down to 3.3 million shares. We had dipped to that last week when we had that big transposition down from the 28th or so. Right, pre-market. What day was this? Let's pop over here. Yeah, so this day, the 23rd, so last Wednesday, right? So we opened like in the 28s and then we shot down pretty hard into the upper 26s and then rebounded for a close over 27. So interesting to see that. There we did see around 1 million GameStop shares did look to have been shorted in order to cause that to occur, in order to get this move, this transposition back down right on top of this 100-day moving average here. So we didn't see anything like that, but we did see these, right? So we got back down to that level, and then we came right back up here in very early pre-market hours. Just do a quick refresh, see if we see anything here. Yeah, it's pretty similar. If we go to our live data here, it's back down to 3.9. Maybe some of these are being borrowed for intraday purposes. This isn't super worrying. A couple 100,000 is not worrying at this point, given what our option structure looks like, given stability in the broader markets. Right, XRT. Oh, I forgot to post the XRT liquidity, but we can take a look at it live. XRT shares are up, but they're still doing this, right? It's off reg show now, but we've still got almost this, basically this 90% liquidity reduction that happens. Look at this time. I don't know why this is happening. Do you know why this is happening? I don't know why this is happening. But around 7:30, 90% of the lending liquidity in XRT evaporates like clockwork. Between 7:15 and 7:30 a.m. Eastern Daylight Time, we get about 90% of the shares available to borrow in XRT. They totally disappear. And they've stayed low. Look at how low they are here. Outstanding is low. It means a lot has been redeemed. I can't say anything about this beyond that. Yeah, there's a lot of liquidity. There's a lot of lending liquidity right now in GameStop. There's a lot of lending liquidity. It looks to be, in general, without XRT being on the threshold security list, this is generally something that says elevated liquidity for GameStop. That is historically what that has meant. What does that mean for our potential for price action? Well, we still have this ability, right? Institutions can, if they decide, they've got millions and millions of GameStop shares to use in their arsenal in order to transpose the price down, if they find some reason for that to be advantageous to their portfolios, their trading strategies, what have you. Typically, we've seen a lot of that used approaching swaps. We're not really close to anything like that. So like in the technicals portion today, I wanted to make sure, we'll come back to implied volatility. I wanted to make sure, right, that I called attention to what some of this looked like, right? So for the past few years, and again, Richard Newton's done a really good job tracking the lows and seeing how these correspond to swaps, looking at Metro Ballin's data. Metro Ballin's done a really excellent job putting together salient data in terms of how swaps are concerned. These happen to line up. Some of these dates in particular happen to line up pretty well with what Richard Newton had identified just based on price action as likely swap roll dates. So if we go back to 2023, right, we can see this kind of wave pattern here where it looked like indeed, right, we had this kind of separation of swaps. So we traded down pretty hard basically into just before December earnings. So this would be around like October, November, potential swap roll there. We traded up. Then basically for all of January, for all of February, except for 1 week, right? So the week of February 13th in 2023, second week of February, just like this past year, we traded up. And then for 4 weeks down. Earnings occurred, big up in earnings, just like we got big up in earnings here. So, right, so we traded down for a few weeks for most of January, early February. Second week of February, reprieve, then 4 more weeks of down, then up into earnings, very explosive into earnings. Then, okay, but then unlike what's occurred after the week of earnings in 2023, we traded very heavily down. Now, what seems to have been the case is we had basically 3 sets of swaps here. Richards pointed these out with his different color-coded stars. It did look like, right, so we had a grouping of swaps in March. We had a grouping of swaps maybe back in, I guess this is, yeah, like December, November area. And then we had one kind of mid to late April. And what's happened is at least the March and the April ones look like they may have gotten closer. So if we go into, right, so we still have this low point just prior to earnings, basically in the fall of 2024. Then we move down, 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 down. Something gets rolled here in March and then mid to late April, right? So these 2 points. What looks like, though, this year, based on both what Richard's spoken about and what has been available to us in the swaps data, is that the swap expiries this year were all concentrated in mid and late March. So they were all concentrated in this area. We don't have anything. We don't have any swaps in April this year. We don't have any in May. We don't have stuff from the looks of it start to pop up again until sort of mid to late June, a little bit in August, some in October for GameStop. So what is that going to look like this year? Okay, so we generally had this move up. So something like, right, short. Okay, close out some of these FTDs and short, roll swap, close out FTDs. Wait, there's another swap, short. Roll swap, close out FTDs, and okay, now just short because it's a dying brick and mortar. Okay, same thing over here, right? Short, roll swaps. Wait a second, the company's going to do the offering where we had one right here. Okay, and roll swaps, but now no more swaps to roll, and the company is most certainly far more than a dying brick and mortar. So I don't know what's going on there. Without swap rolls coming up, do we necessarily have to align with what we've seen historically? Could this be an opportunity for significant divergence from the sorts of patterns that we've embodied historically? Certainly, it seems to be a good opportunity for that. We do have nonetheless, right, Richard's an early version of his ETF model, which looks to project changes in price action with respect to ETF liquidity, does suggest that because of what has gone down with ETFs recently, this does suggest that we're going to get something of a correction here. It has predicted and correlated with our price action pretty closely, even actually down to a few cents here yesterday. But will this result in a reversal to the downside? Is a potential reversal something suggested by our mystery share buyer here? We'll have to continue to evaluate this model. Liquidity in general, ETF liquidity in general, GameStop lending liquidity in general, always presents an opportunity for institutions to come out and deploy that liquidity in order to adjust the price downwards. Right now, I would not say that there is an obvious target for them to go ahead and choose to do that. They can do that, but is there an obvious reason? That's kind of an open question. Implied volatility is low. Typically, we've seen attempts to control the price and to adjust the price downward as well when we see volatility high. Our implied volatility has been trending lower and lower and lower in terms of our 10-day mean implied volatility, right? Here, both our absolute value of IV, so like our Vega values on contracts, and our Volga, so the rate of change of IV, are pretty low. In fact, they look like something that we would expect, less so over the past couple of weeks out of one of these higher volatility price up phases, and something that is more akin to what we've seen in our high liquidity price down phases. So it does reflect that heightened availability of lending liquidity. But something strange to see, something uncommon, usually in the context of these types of trends. I mean, we did see, going back to April of 2024, we did see IV get down on the lower side. So is it possible? And right, so I pointed this out yesterday too, right? We keep seeing, look at this, 9th of May, we have IV down below 70%. So what this says is, we're not really expecting, right? The broker dealer is essentially saying, we're not expecting anything big, basically, in these weeks from now out through May 30th. We're not expecting anything big. In fact, even this first weekly in June is pretty low. higher than anything in May, but still on the lower side. June monthlies up. July still up. October, yeah, how about that? October right now is our highest IV in terms of strikes. So very curious there. So, I mean, right, brokers are coming out and basically saying, we don't think anything's going to happen in May. I mean, do you necessarily trust them? Is this an opportunity for them maybe to acquire, to buy back options contracts at a discount? Interesting to consider. Not sure. Technical wise, besides these historical comparisons, still looking like we're showing support, continuing to show support here atop the 100-day moving average. We still have momentum on our side on the daily and weekly timeframes. It looks like actually starting on the weekly timeframe. The 54-hour moving average still shows support. We have the 104-hour moving average coming up underneath us. Very interesting to see how that's moving. RSI on the 4-hour still showing broadly neutral. So this continues to predict stability. Options-wise, slight skew towards short calls. We did have the 32s were almost entirely purchased yesterday at the ask, so that's on the bullish side. We also saw a number of $30 contracts come in for the 23rd of May, a pretty big block worth about half the total OI now at that strike. Came in at 30 at the ask, almost exclusively at the ask. So very interesting to see that be the case, right? Max Pain at 26, this continues to project stability. I'll just issue caution in that we have seen these types of indicators from our technicals, from our options data going back to January, January 14th, right? January 14th looked okay. I mean, we were sort of trending down anyway. We had come off a double top. We're not showing a double top formation right now. We don't have that same structure, but at the same time, is Roaring Kitty suggesting, or if this is Roaring Kitty or the mystery buyer suggesting that we're going to have a leg down off of this Trident formation, or is it now that we leg up? Is it the inverse? Not sure exactly how to read that. I know some of that gets pretty speculative. Gamma exposure, again, right? Our landscape really not changing too much. I mean, if somebody comes out and says, I'm going to take 2 million shares and just pummel that $27 position as soon as we tested intraday today, yeah, we can slip under there, and we can slip under pretty hard. And there's nothing really to catch us under here except technicals and fundamental valuations of the company. There are no options down here, really. OI is very low. If we do slip down there, we can just get moved down here and probably not stopping until 25, just based on what the options landscape looks like. That's not to say that necessarily has to happen, but a strategic or a tactical deployment of shorting, of lending liquidity for that purpose could destabilize us. I mean, to what end? I don't know. The swap end is not necessarily clear. In March, those seem to be pretty clear ends for moving the price down, but doing it at this point, not exactly sure. Not exactly sure. So, I mean, structurally, right, we're still looking pretty good. If I were just making a call off of these indicators, off of technicals, off of momentum, off of options, I would basically say, I don't really see a reason why GameStop would move to the downside, why we would have something of a retrace of a correction, except maybe the fact that we're kind of back up to where we traded down off of this kind of previous Trident formation. And we're basically up to the low of the day. Our price right now, pre-market and kind of closing prices, right around where we were. So if we bump over here, right, it's right around where we were at this, this isolated daily candle here around earnings. So to get some kind of correction, maybe down here, yeah, I mean, we do have, that's kind of the 25 area is where we would leg down to from a technical and options perspective if we were to leg down. But there's nothing in the technicals themselves. There's nothing in options, the options data itself that says that we would do something like that. So really the only kind of question mark, the only concern I have does come from our ETF liquidity, does come from a lot of this really excellent data that Richard Newton's been able to provide for us pretty meticulously for quite a while now. And yeah, and sort of testing out some of these models of trying to predict when this lending liquidity is going to be used in order to transpose the price down, right? That's a big question mark. That was a really big wild card for us in this last in this last price cycle. That's really the only thing that disrupted it, right? We were all of our data in terms of technicals options looking great. Only these moments when trying to anticipate, okay, when are they going to come in with this synthetic liquidity? When are they going to take this, all these shares that they just created by doing the ETF musical chair stuff, and when are they going to just shove us down and do this kind of price transposition, right? You know, some people like say, well, you predict all this stuff, or, people come out here and they try to predict with TA and all this and it doesn't work. It's like, hey man, that's because there's this other component. There's this synthetic liquidity component. And when it comes to GameStop, that's part of the reason why GameStop is such a fascinating security, fascinating company to study, to analyze, to try to understand, because of the degree to which the use of synthetic liquidity is so crucial to understanding the transitions within its phases, within its cycles, between phases. Understanding this dynamic, right? It's not that it doesn't happen on other stocks. Naturally, it must occur on other stocks, but it seems to be something that is so naturally a part of the GameStop landscape that the optimal trader, right? The best performing GameStop trader is a trader who has an intimate understanding of how this will work. And it seems, for that matter, like Roaring Kitty himself is somebody, like Keith Gill is someone who has an understanding of how that works. Like Ryan Cohen is someone who has an understanding of how that works, and has been able to harness that information and that understanding to the benefit of their investments and of the company itself. So that's certainly something that I'm going to continue to try to keep understanding, and hopefully you will be along with the road, along the road for the ride, something like that, with me as I try to do that. So thank you very much as well to everyone who has been watching and listening, and was watching and listening today. We'll look forward to seeing you guys tomorrow. Let's see what we have ahead of us. Thanks very much.